Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner here at the firm. Eric, how often should a company be doing a financial statement?
You know that. Once a year, right in the middle of tax season, that's the best time to do it.
Yeah, I'm sure that's very efficient and effective, right?
Great way to make timely, accurate business decisions.
Or maybe inaccurate because they are infrequent.
Infrequent and inaccurate at that point in time.
So in reality, we would never do this.
Correct.
That's not how our business works, and that's never how we would treat a client.
We actually wouldn't take on a client who doesn't want to work with us on a monthly basis.
And so let's actually just get right into that. Why do we do it on a monthly basis?
Yeah.
And why should a client do it on a monthly basis?
Yeah. Well, one of the number one things, we hear three problems all the time from business owners when we talk to them who aren't working with us at this yet. One of them is, hey, I got hit with a surprise tax bill. I'm always on extension. I'm at the post office, waiting in the big line at the mailbox, ready to send out my tax bill check right at the nth hour. So that's one problem that we hear on a regular recurring basis. Number two is, hey, I don't really know what's going on with my financials. My accountant doesn't understand my business. Or, hey, I'm even paying a monthly accountant and I'm not getting anything out of that.
So you're saying, hey, I pay you every month, but you don't see anything happening every month.
Exactly.
Okay.
And then the third thing is we just, they won't respond, or maybe they respond, but they eventually get back to me and it's a lot of short yes or no answers, not a lot of explanation. Hey, here's some options that we have. Here's some alternatives we can take. No, it's a lot of yes, no, I got to hurry up and get off the phone because I got a million other things to do.
Okay. So essentially what you're saying is these monthly check-ins are really just that. It's a check-in. It's an opportunity. You get they look at your pulse.
We have a process that we do to combat those three. We identified those three issues in the marketplace, and our process is really built around to address those three major things, right? Because preparing an accurate tax return and doing bookkeeping are inherently, those are not wildly difficult things to accomplish. Just like everything is really not that wildly difficult to accomplish. But what it is really hard to accomplish those things consistently. So we built our process around that. So one of the things we said is we only want to do monthly accounting. We don't want to do annual accounting. We don't want to do quarterly accounting, because those change the cadence of how we work. And the longer we wait to do that accounting, the longer that timeline becomes to address things as they come up, right? So if, hey client, I just saw you did this. We need to go and address that. Hey, maybe my inventory balance is continuing to grow. Maybe you have a parts leakage. If we're doing that once a year, right? I'm like, hey client, you got a big old problem.
And it's way too late to really address it.
Yeah, or we talked about that on a different podcast of that could be $120,000 a year problem. And that's a lot more than what they're going to spend with us to get a monthly financial statement. And that's just solving one really small problem.
Well, and for example, let's say sales tax changes, right?
Yep.
That happens and not everyone accounts for it.
Yep.
That could get corrected that month.
Correct.
Or it would be noticed at the end of the year, and that can be a whopping issue.
Exactly.
So what I'm understanding is from this whole thing is it helps both parties, right? It addresses the workload, and it's consistent workload for the accounting team. And then the client is actually gaining the benefit of getting a response and knowing what's happening every single month.
Well, let me ask you this. How can you plan for taxes in the fall if I don't have books?
Great question.
Books, your financials for your business generally drive your tax liability. If I don't have books, how are we doing planning?
Yeah. Well, I like to kind of think of it this way. When you get in a car, you have to already know where you're going. You don't just decide where you go as you're driving down the road.
Exactly. So one of the other things we do, so So that's kind of one, the frequency, right, is an issue. And then the other one is, hey, my accountant doesn't understand my business or doesn't understand the financials. They can't explain it to me. Within our onboarding process, we really use our onboarding process to speed up the relationship. The longer you work with your accountant, the better it gets, right? They understand you more, the more that they get exposure to what you have going on. And then you also understand how they work and you kind of get much better sync. We try to speed up that process with our onboarding process. So we have multiple sessions during that period. One of them is a initial strategy session. We're going to talk about your business, your goals, but also a lot about the peculiars about how your business operates, how it works. Our knowledge in the automotive space really helps us accelerate with those types of businesses because we already understand the business model, the background. So now we're just talking about nuances for their particular shop versus.
And we're talking like, hey, we do imports or we work on RVs.
Yeah. Or, hey, here's how my compensation structure works for my staff, which might be different than, my standard flat rate and percentage of gross profit that most shops might operate on. But in that initial strategy session, right, we get a lot of understanding around your business, how it operates. And then we can that helps us translate your financials to actionables for your business. We also do another session called a coding review call. So we're going to go through 3, 6, 9 months of coding of all your expenses to make sure, hey, we're all on the same page of like, here's my regular recurring vendors. This is what the exact use I'm using them for. Do we have that in the right bucket? Because we know so much, but if we're making the decision without thorough input from you, we're making an assumption and that leaves a gap to be inaccurate. And then we capstone that onboarding process with a financial statement review session. We walk with you line by line through that financial statement. And that allows us to make sure we're on the same page and us also to identify gaps in your understanding around the financials of your business. So we know we can tailor our strategy sessions that we have throughout the year around helping you understand your finances for your business better.
And these conversations that you're having, this is with business owners, right?
Correct.
Yeah. And you're basically going through, step by step with them and maybe their bookkeeping person. Is that about it?
Yeah. Usually it'll be, sometimes they'll bring in a general manager or a shop, a service manager for their shop or for a business. There might be other key personnel that come into those calls, but usually it's going to be the owner and probably a bookkeeper.
And Eric, how small would you say a shop could be or any company could be where they should start looking at it on a monthly basis?
Yeah. The hard part is we do hit an access, right? About $500K of revenue. It gets really expensive to do monthly accounting. But what we see oftentimes is those shops that aren't engaged in either monthly accounting or a really good, tightly run process with their accounting firm. I mean, we see then, back taxes unpaid, issues in payroll, and then the financials can come as a total mess. So really, I don't think there's a certain size you really need to, let's call it $200,000, $300,000. Really kind of more depends on how profitable are you, right? Because that's going to be a direct measure of ROI. If I'm $100,000 and that really doesn't move the needle, right? I can barely keep my doors open. It's kind of hard to incur incremental costs. And I get that. You might be better off doing a DIY solution and you might have to grind through that period of time. But as soon as you start scaling, and especially if you're in growth mode, the worst thing you can do is jump over dollars to save pennies, which I mean is, hey, we're not going to invest in an accounting process because I'm too small, but I'm trying to double my size over the next 2 years, 3 years, whatever it may be, because that growth is going to get really hard to control if you don't have your hands wrapped around your finances for your business.
So really, it's not about, I guess, size isn't really a thing. It's because it could just be one facility. It could be got 2 guys in an office and 6 bays. And that's more than enough.
Oh, that's a big shop. That's a good size shop. Yeah. I mean, it could be a service writer and 2 techs. That shop could be doing $700-800 $1 million. It should be. And And that's a great time to start with us, is if you're primed to be in that position.
So really it's more focused on growth. If you're not looking to grow, then maybe this isn't the kind of system that you really want.
Yeah. I mean, like if you're like, hey, I'm riding out what I have, I don't really want to change. I don't really want to think differently. I'm just going to continue to do what I'm doing, and it works for me. Right. And that's fine. You're happy where you're at, great. Like, I'm not going to try to convince somebody to change when their situation is in their opinion,
right? Yep.
Yeah. I mean, right. We want to make sure we're providing value. And if their value is, I'm really happy where I'm at, and I don't want to deal with the headache of a change, or I don't want extra pressure of, hey, I need to focus on the financial performance of my business. I get it. Everybody has a different way they want to run their business. And we have certain fits of people who we think would work best with us. And we want to work with the people that we know we both can be successful, right? We want to, at the end of the day, we want everybody to win.
Eric, what's your favorite thing about doing monthly accounting as opposed to doing it the old school way?
Yeah, definitely. It puts us in a position to make sure that we are maximizing the value we provide working with a small business. We're able to be proactive in giving them advice around the operations of their business and the performance of their business. Also allows us to be proactive with our tax planning. We know where your business sits all year, and we can give you a prediction of where you might land for taxes and how we can maybe mitigate those taxes.
That's perfect, Eric.
Thanks.
Anything else you want to add?
I think that'll do it.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.